Buying and selling in the equity market are much easier if you know how to play the money correctly. For many Japanese stock traders, winning has become their hallmark. They seem to know the do's and don'ts of the equity market. What is it they know that many people don't? Or what secret have they been hiding? Let's find out in today's video. Kindly subscribe to our channel and like our video. Stock markets are one of the sizably desired investment targets for fresh and able investors. However, there are rules and strategies to winning. Today, we release the top 5 stock market trading secrets you can learn from successful Japanese traders. When asked many of these Japanese stock traders their secret, here is what they had to say. 5. Trade in the bear market. As funny and confusing as this may sound to you, bear markets are the perfect times to make a move because bear markets offer many exciting trading opportunities. A bear market is when the stock market faces price drops for a more extended period, especially when security prices fall by 20% or more from recent highs amid extensive pessimism and negative investor sentiment. Generally, a weak or stagnant economy, pandemic, conflict, political catastrophes, and fierce paradigm transitions in the economy are factors that might induce a bear market to ensue. High prices and increased investor sentiment often define the early phase of a bear market. However, towards the verge of this phase, investors plunge out of the markets and take away their profits. Subsequently, equity prices drop snappily, trading and profits fall, and economic indicators that may have once been positive starts to fit below normal. Moreover, stock prices prevail to drop, and investors slowly get attracted to the stock market once again. After this, the bear markets wash away, leading to the bull markets. 4. Make use of technical analysis and charts. In technical analysis, alterations between the rising and falling trends are constantly piped by price charts. Technical analysis is used to forecast the likely future cost trend based on market data. When a price chart gives a sign of change in a trend direction, it is known as a reversal pattern. An outcome pattern shows up when the trend goes on in its existing direction, heeding a brief stillness. Primary analysts assess stipend, dividends, assets, quality, ratio, products. Artisans require many protocols, devices, and techniques, one of which is charts. Using charts, and technical analysts aim to identify price patterns and market trends in financial markets and exploit those patterns. Great investors have long used price patterns to examine current movements and forecast future market trends. This helps you determine when is a good time to hop into the stock market. 3. Consider stock trading as a winning game. In the world of gaming, there's only one winner, and it's either you win or lose. There are no two ways about that. Nevertheless, if you're an investor, you must play to win. An investor's goal is to make profits, hence, enter the stock market with the gaming mindset of winning. Everyone loves playing games, but no one wishes to lose while playing. So the Japanese trade gurus master these skills and play to win. Like a game, the equity market has its regulations, and they know it just so well. It's not surprising how successful many of these Japanese traders have become. They love what they perpetrate and trade stocks as gaming pros. Seizing advantage of small price schemes can be a lucrative game if it is manipulated correctly. However, it can be challenging for beginners or anyone who doesn't cling to a well-rounded out strategy. 2. Don't focus on the results. Suppose you're entering the stock market thinking of money. Money, money. Best you find somewhere else to invest because the stock market is pretty gloomy, and there are times when the stock markets can wreck your nerves. Takeshi Kogawa says, if you care about money too much, you can't successfully trade. This is because the fear of losing an enormous sum of money will discourage you from investing more. Instead, focus primarily on your progress and process. The truth is, we have more power over our process than our results, and a suitable procedure leads to good outcomes in the long run. Focus and concentrate. That way, your outcome will be better. 1. Concentrate on investing for the long term. Peeking at the short-term opportunities in the stock market will not be as profitable as a long-term scenario. If you don't feel satisfied holding something for the following 5 to 10 years, don't bother owning it even for 20 seconds. Stock market involvements have been demonstrated to be one of the best ways to grow long-term wealth. The stock market is a decent investment, no matter what's transpiring day in day out. You must develop a trading technique in advance and the discipline to stick to that strategy. Investing in stocks is filled with sophisticated strategies and processes. Yet some of the most successful Japanese traders have managed to keep up with this complex structure. Even with limited or no know-how of the equity markets, a new investor can always find a way to invest. It is comparable to playing your video games. When you are new to the market, you have to be defensive. And like all other games, you either succeed or fail. However, as an investor, yours isn't the short end of the game. Instead, yours is to win even in the face of all uncertainties. Partakers in the stock market span from fresh individual stock investors to the more outstanding investors globally. Your success in the game is comparable to your strategy, not how long you've been in the market. Let us hear your thoughts in the comment section. I hope you got a kick out of today's video. Don't forget to subscribe to our channel, hit the notification bell, and like our video. Thank you for watching.